What is up, everybody? Welcome back to another video. This video is yet another concept video. I made one recently on immediate rebalance and kind of jumped over some of the main foundational ones. Like, in order for you to understand immediate rebalance, you have to also understand fair value gaps and inverse fair value gaps. So inverse fair value gaps are one of the most crucial concepts. Like at the start of the video, I said you guys first learned about fair value gaps. You're like, damn, this is making me understand the markets. Then you learned about IFVGs and you're like, damn, now I'm a good trader. And so IFVGs are a really important concept, and in this video I'm just going to give you guys a short little breakdown of IFVGs, how you can trade them, and like the different methods of trading them, different ways to adapt IFVGs to current market conditions. And I'm just going to go over like what an IFVG is first. So in order to find an IFVG, first you need to identify a fair value gap. And fair value gaps form between three candles. So here we have 1, 2, 3 candles. In between these three candles you have a fair value gap. It's the gap that forms as long as the wicks don't overlap. If the wicks overlap, just like I did right there, no fair value gap would form. It would just be a immediate rebalance, the concept that I made in the last video, immediate rebalance, right? But if it does not overlap, then there forms a fair value gap. This fair value gap is now a bearish fair value gap, something that pushes price down. So notice how this was a bearish candle. So this is like a magnet that price then draws up into, and if it respects it, which means it closes inside of it, how fair value gaps work is if a candle pulls up into it, but it does not come up above, then you can see that it's clearly showing you a sign that the candle wants to stay inside, and the next one has a probability of going down after respecting it, right? So that's how fair value gaps work, and this is a bearish fair value gap. So when price would come back up into it, it would melt from it. However, IFVGs mean, like, what if it comes up above a bearish fair value gap? If it comes up above a bearish fair value gap, sometimes it's not even going to pull back down to the discount before going higher. Like, there's a lot of Fibonacci traders that see a little swing high like this, and then they expect price to come down into the discount before going higher. But there's a concept that will help you catch the moves that don't come down to the discount. And that concept is called inverse fair value gaps. That's what I'm teaching you in this video. So now imagine that the candle, instead of closing inside of it, pulled up above. And a lot of new ICT traders, they see this and they're like, oh, fair value gaps literally don't work. Like, I tried to take a trade, I put my stop loss above the fair value gap, and I got stopped out. Why did I get stopped out? Because fair value gaps are just a small piece of the bigger puzzle. And the bigger puzzle involves where the market is going in the long term. So especially on gold right now, we're extremely bullish. And so when you identify these fair value gaps, essentially, if it closes above, the bearish fair value gap becomes a bullish fair value gap. So let's say it comes up into it, but pulls up higher, closes above, the next candle opens, taps back in, and still fails to close below it, fails to run through it. And that shows you that the market is now respecting this fair value gap as a bullish confluence, and it's likely to expand higher from it. Okay, guys, very simple. It's honestly super simple to understand how IFVGs work. You guys may need a little bit of practice to actually look at it. And I'm in replay mode right now, so I'll show you guys an example. This right here is the lowest bearish gap. So when the next candle opened, you can see we opened, came up, and closed above it. So now this bearish fair value gap, like if it had closed inside of it like this instead, and there was like a little wick that was above, but the candle actually stayed inside, then you probably would have had a bearish expansion from this gap. But because the next candle actually opened and closed above this gap, then after the next candle opens, we expect it to be used as a bullish confluence to push price higher. And you can see right here, we tap back into it. So we would be getting in off of an IFVG. If we're expecting price to drop to all-time highs again, or into the next like confluence like this one, then you take longs from this. And kind of depending on where it's at, like for example, if there is a fair value gap inside of the inversion, so you can see right here, now we got a new fair value gap. But is price likely to tap back into this fair value gap? Likely not, because we already tapped into an IFVG, so it's probably not going to tap back in. So one of the things that I like doing is whenever we get a new fair value gap, I like putting my stop loss literally right under the bullish fair value gap. Now, oftentimes we don't actually get a new fair value gap, and instead price would then expand from the regular gap. or like we wouldn't get a gap. So if we wouldn't get a gap inside of an IFVG, then sometimes I'd give the stop loss some room and just make sure that my RR is still good enough to actually take the trade. So here we got the entry. Our stop loss is below the fair value gap, which is right here. This is the fair value gap, like I said. And you can see price will then begin to expand, close above the next gap. So once again, you see how it didn't respect it. It ran straight through it, just like this one. Why? Because price clearly wants to go higher. This one wouldn't have given you an entry opportunity because from this one, we expanded higher. We didn't actually pull down, we just expanded higher. It closed much higher than this one. So we're not even going to look at this one. We're going to mark out the one in the highest premium. And you can see once again, what did we do? We closed above, we tapped back in, and this candle closed once again above the IFVG. So that's a clear indication that price wants to go higher. So if you were to enter again, you would enter like this. Once again, we're getting a new gap, so you can like put your stop loss underneath the IFVG and then expect the next target to get hit. And essentially that's how fair value gaps work. You'll see that we stayed above and then we expanded higher from there as well. Before we obviously dumped a lot. So there you go. Second TP hit, we just took out this high right here. Market never actually came into all-time highs here. This is from Friday's price action before we got a huge dump. But I just wanted to show you guys how IFVGs work. That's it. And your stop loss placement, kind of like you have to learn how to adapt it based on the current market conditions. And let me show you an example of an IFVG where there is no bullish fair value gap that forms inside of it as well. Here we got another IFVG. You can see we closed above, tapped back into it, and tapped back into this regular FVG as well. So here we have a regular FVG, and then price obviously pushed higher from there, respected the next FVG that formed. As long as you're like using price action, you can see that the order flow is like moving towards bullish, like moving towards the buy side. So first we run from this bearish fair value gap, we close above it, we tap back into it, push higher. When we push higher, we created another FVG. So this is an FVG. This right here is an IFVG. Do you guys know why this is an IFVG? Because this one is a bullish one, so it has to go higher. This one's an IFVG because it inversed. It was a bearish one, but we closed above it. So that's what is the difference between an IFVG and an FVG. And then you can see that, like, if you're just looking at the fair value gaps, you can kind of see what the order flow is pointing towards. If you can see that all the bullish confluences are being respected and all the bearish confluences are being disrespected, then price is clearly moving higher. So I did want to show an example where we didn't get a regular fair value gap when we created an IFVG. Most of the time we do get that IFVG plus a fair value gap, but I kind of just want to show you guys so you know how to adapt when it doesn't have one. So here's an example. Perfect, guys. So there's the concept of immediate rebalance, right, guys? So here we got an IFVG, and you can still see that the candles clearly respected the IFVG. After it closed above, it came back down, and all these candles clearly stayed above the low of this IFVG. You can see here that the wicks overlapped. They prevented a new fair value gap from forming. So we didn't get an IFVG plus an FVG. We got an IFVG and an immediate rebalance right here. So the candles still stayed above, and this is how you would be able to execute even though there's only an IFVG. You just kind of have to like acknowledge and learn the concept of IMR, which is immediate rebalance. It came down. And this would have given you a better entry than the other one. And what I would have done in this instance is if I see that it's pulling down and the candle doesn't close inside of it, but instead it pulls down and rebalances, then I would try to hop in off of the rebalance knowing that price is going to push back up. And my stop loss would either go below the low of the candle that it rebalanced, or it would go right below the rebalance once price starts moving up, because typically if you get in a good spot like in the wick, then you would have an instant profit trade. So that's what I do sometimes. Clearly the second candle dug back into it, but still a really solid IFVG setup. This IFVG right here didn't get respected, but if you look at it, like obviously we're consolidating, and right here we're pre-market. before New York session. This right here, we're inside of New York session. If you're trading pre-market, the algorithm clearly is not respecting the concepts. So if you guys are wondering why your IFVGs aren't working, most of the time it's because you're just trading at the wrong time. So focus on pre-market, focus on not trading pre-market, and focus on actually understanding which times you should be trading and which times you shouldn't, because the market's always going to respect concepts when the session is live, when the session is traded. So if you guys have any more questions regarding IFVGs, feel free to drop them in the comments. If you want to know the broker I use for my live account, I'll be linking that below, and also my Telegram channel. I also made a few announcements that I'll cover in the end of this video right now. So this is the announcement I posted this morning inside of the Telegram, which I will link below. I am migrating, like, pretty much I've done everything. All my trades have been sent out inside of the Telegram, all my entries and stuff. I'm just migrating over to Discord because it's a lot more user friendly. Launching a little one-on-one mentorship with 30 people, like kind of like an inner circle group, but that's only 30 people. The main announcement is that I'm doing a funded trading challenge. So if you guys have ever seen one of those with prop firms, you know that you're competing against thousands of other people, and like the first, I don't know, 10 get a account or a cash prize. But I'm doing one only with my community, so it's going to be a tighter group, and I don't know the time period that I'm going to run it yet, maybe 2 weeks, maybe a month. But the top 3 winners will get a instant funded account, which is pretty awesome, with the prop firm that I have been using recently, Zero to Market Engineer course, which is covering all the concepts. Like just like I just covered IFVGs, I built a course covering all the concepts that I know, immediate rebalance, all of that, and then putting them into a model. Because even though you guys are learning these concepts from me, a lot of you guys still struggle to find profitability. Why? Because you struggle to pair the concepts correctly. You struggle to understand how you use time frames with it properly. We are going to do an additional daily live stream at 11 a.m. Pacific Standard Time, my time zone. So that's the Silver Bullet and PM session. I'm going to be live twice per day now, in 5 for Asia session, and then 11 a.m. for New York session. Weekly prop firm giveaways. So I have a lot of partners with prop firms, and I get a lot of accounts to give away. So you guys just got to be a part of the Discord community that I sent out. I'm migrating all of my live streams over to Twitch, so you guys will see me on Twitch. And yeah, if you're looking for that, just join in the Telegram, comment Project 1.0, and I'll send you the link in the Discord, or to the Discord that we are doing everything in. Thank you guys for getting through this video, and I'll see you guys in the next one. Peace.